A very warm welcome to you as you join us on today's episode of Tax Matters. Chiamaka Ohauchi. We do hope that you are gradually settling down. Schools have resumed and work has commenced everywhere. All over the world, governments at national and subnational levels draw up budgets. This also applies in our personal lives. At the heart of all budgets are fiscal provisions, that is, provisions that guide taxation of individual and corporate bodies. In business and in personal affairs, taxation occupies a preeminent place. Last episode on this program, we shared with you the details of the Federal Government Budget 2022 and the provisions of the Finance Act 2021 as presented by the Honorable Federal Minister of Finance, Budget and National Planning on Wednesday, the 5th of January. We also had in the house a guest, Mr. Albert Folorunsho, who analyzed the provisions of the two documents. Due to time constraints, the interview with Mr. Folorunsho could not be concluded. That we want to do today.
I'm a very busy man. My business involves a lot of traveling and I interface with lots and lots of people and organizations. Tax compliance used to be a big drag on my business. It was time consuming and very costly. But now, no more. Introducing the FIRS Tax Pro Max, the truly fully end-to-end tax administration solution for companies' income tax, value-added tax, petroleum profits tax, and all other tax types. For fast, efficient, and convenient end-to-end tax experience, log on to www.taxpromax.firs.gov.ng. Tax Pro Max has turned things around for me. It is fast, user-friendly, and cost-effective. FIRS, making tax administration as easy as ABC.
Mr. Folorunsho, welcome once again.
My pleasure.
All right, sir. Just to reiterate on the points you made earlier, now we heard the Honorable Minister saying something about FIRS appointing agents for VAT collection from non-resident companies. We would like you to speak more on this.
Okay, so recently the Federal Revenue Service issued a circular on how non-resident entities' VAT will be collected or how they will be, support the FIRS in ensuring adequate collection of VAT, particularly on digital transaction. So that has now been captured in the law to say that where you have a non-resident entity that are dealing majorly with consumers directly, okay, which we call the business to consumer, as opposed to business, because for business to business, the Nigerian businesses are expected to register for VAT, and where they are dealing with non-resident entity, it becomes their responsibility to withhold the VAT and then remit to the Federal Revenue Service. But when you are dealing with consumer directly, who buy books online, watch video online, we have Netflix here and there online, is much more difficult for the Federal Revenue Service to track those individuals and ask them to pay VAT on the payment they are making to those non-resident entities. So what has been done is to engage those non-resident entities like Netflix, like Amazon's and all that, and require them to register for VAT Nigeria and to be appointed as agent of the federal government for the purpose of collecting VAT on transactions, being carried out in Nigeria. So which means if you are dealing with such an entity and they issue you an invoice, you pay them in full, it is now their responsibility to capture and ascertain how much VAT element of the payment Nigerians have made to them, and they remit directly to Nigeria, okay, because they are businesses that are recognized and they are being appointed as agent of government. It's just to ease collection and ensure efficient collection of taxes. So it's not difficult. It's something that is being done all over the world, and it is just that Nigeria now has also taken that step to ensure that. But of course, where a Nigerian business fail to withhold the VAT and probably pay to the foreign entity, the foreign entity will still be required to remit the VAT to the federal government of Nigeria. And for the purpose of carrying out their activity as taxpayers in Nigeria, that is, filing their returns, making the payment, the FRS allows the non-resident entity to appoint a representative who will act on their behalf in Nigeria and make those remittances on their behalf in Nigeria.
That's actually, the right step in the right direction.
Correct.
Yes. We don't know if there's any penalty if such companies fail to file and remit.
Of course. Just like any taxpayer in Nigeria, where you fail to file your returns within 21 days after the end of the month, there are penalties for failure to file. Where you fail to pay, there's penalty, and there's also interest for failure to pay. And of course, those remittances are expected to be made in the currency of the transaction. If the transactions are carried out in dollar, the non-resident entity will be required to remit the VAT to the account of the FRS in dollar.
All right. Thank you very much, sir. Now on security lending, what was the situation before on security lending, and what do we have now in the Finance Act 2021?
Okay, so security lending transaction is a situation where, investors and owner of shares, blue chip companies, make those shares available to stockbrokers and operators in the capital market for them to trade or to operate on the shares instead of just keeping them aside and wait till end of the year and collect dividend. Okay, so the existing provision was that where compensating payment are payment made by the borrower. Somebody borrows somebody's share, we call the person the borrower, while the person that gives us his or her shares is called the lender. Okay, so the borrower is supposed to pay the lender for releasing the share to the borrower, okay, which is referred to as compensating payment. The old provision says that the compensating payment is strictly the dividend that is due on the shares, which will be paid to the lender. And of course, since dividends are always treated as frank investment, that compensating payment is deemed to be franked investment. But of course, if that is just the provision, then it will not be relevant, it will not be profitable to the borrower. So the borrower now is allowed to turn around, the shares, sell it, buy it back, make a gain on it, and then make payment to the lender. So where payment being made to the lender is higher than even the dividend received on that dividend, it will still be treated as franked investment income. So that is just the new amendment to the law to say that the compensating payment is not restricted to only dividend due on that share. All
right, interesting. Now, it seems like the Nigeria Police Trust Fund has finally sneaked in. Are we right to use the word sneak?
No, not really. The law is already there. I think what has happened is that the FRS has now been mandated. When the law came out, people were charging, but since the FRS does not have the mandate to collect, okay, people have not been remitting. There's no account, there's no basis to remit. But the law has now said that it is the responsibility of the Federal Revenue to collect, to assess and collect on behalf of the Nigeria Police Trust Fund. So the 0.05% of profit as specified in the Act can now be collected and administered on behalf of the Trust Fund by the Federal Inland Revenue Service. Okay. That is just the amendment.
So which companies are liable to the Police Trust Fund levy?
Okay, as far as police is concerned, every company is liable to pay the police trust fund levy at 0.005% of the profit. As long as the company has a profit after tax, such a company will be liable to pay the police trust fund levy.
Interesting. That takes me to the next question. What really is this NASENI levy, and also is this levy payable by all companies?
NASENI levy, which is the National Agency for Science, Technology, Science, Engineering and Infrastructure, okay, has been there for several years, and the provision is that all companies in the banking sector, in the ICT sector, maritime, aviation, mobile telecom, and oil and gas, whose turnover is above 100 million a year, are expected to pay 0.25% of their profit before tax as NASENI levy. Now it is the responsibility of the Federal Inland Revenue Service to also administer and collect on their behalf.
Looks like more responsibility for the FRS.
Yes.
I'm a very busy man. My business involves a lot of traveling and I interface with lots and lots of people and organizations. Tax compliance used to be a big drag on my business. It was time consuming and very costly. But now, no more. Introducing the FIRS Tax Pro Max, the truly fully end-to-end tax administration solution for companies' income tax, value-added tax, petroleum profits tax, and all other tax types. For fast, efficient, and convenient end-to-end tax experience, log on to www.taxpromax.firs.gov.ng. Tax Pro Max has turned things around for me. It is fast, user-friendly, and cost-effective. FIRS, making tax administration as easy as ABC.
As Section 22 of the Finance Act it reinforces the Federal Inland Revenue Service mandate as the principal tax collection agency. Currently, we have so many agencies, including some law enforcement agencies, that go about doing tax audits, go about raising tax assessment on companies, making the ease of doing business really complex for businesses. So this is to reinforce the lead role of the FIRS and to confirm that the FIRS is the principal tax revenue collection agency, and that they may collaborate with other law enforcement agencies of government to enhance tax collection.
Now, on the reinforcement of the mandate of the FIRS as the tax collecting agency, what was wrong with the status quo and what do we expect going forward?
Okay, so I don't think there is anything wrong with the status quo. It's just that there are encroachments into their space by some agencies of government who also think that they have the mandate on behalf of the federal government to collect some taxes. But by this provision, this law has now given priority and precedence, to FRS as far as collecting revenue on behalf of the federal government is concerned. So it has now become an offense which can lead to 5-year imprisonment or payment of 10 million naira or both for any officer of any of those other agencies, okay, of any of those agencies who encroach to an area that is restricted and limited to the Federal Inland Revenue Service, particularly on assessment and collection of taxes. Okay, we have several agencies. Even the National Assembly sometimes tends to have to say they have oversight function to collect taxes. Okay, I don't know how much and how far this will also affect them. We have RAMFAC, we have EFCC, who have also sometimes encroached on those areas. But for EFCC, I mean, if the Federal Revenue think that they need their support where there are financial crime relating to tax, of course they can be invited and they can join or support the FRS in carrying out their responsibility, but not to take over their responsibility. Another provision that has been made for the Federal Revenue Service is that they can now deploy, apart from the proprietary technology that was in the old provision, they can use third-party technology, which is required to automate the tax administration process including collection of information and assessment of tax. That is also very significant. We expect the FRS now to engage, third parties who will help them in deploying, in giving them the right technology that they require to automate and to have an efficient collection of taxes and administration generally.
All right, sir. Now, I would like to know the implications of the various provisions or measures for, one, government, FRS and tax revenue earnings, for businesses and also the citizenry.
The general
yes.
implications.
Yes, sir.
Of course, like I said, the Finance Act is to enhance, the national budget and to ensure that the government is able to meet the required funding for the budget. Apart from that, if you look at the tax law in the last 3 years, it has been, updated reasonably and gradual. There are some of them that need wholesale amendment, like the Capital Gains Tax, like the Stamp Duties Act. All of those need some much more wholesale amendment. But for CETA and some other provisions, the yearly amendment is bringing the tax provision, to be aligned with the reality of the time, which is part of what is captured in the national tax policy, even though there are deviations here and there from that provision. But at least having the tax law, examined on a yearly basis, amended, even some provisions last year are now being amended, which is making the tax law to be up to date. When you have an up-to-date tax, of course, the fiscal system will also be up to date. So we can say that as far as the tax administrators are concerned, they are able to plug loopholes, identify, as quickly as possible. And of course, it also allows the taxpayer to be sure that whatever provision that is existing and for which they have taken advantage of will not be taken against them, because that is the existing provision. If the government wants to change those laws, they have the opportunity of changing them now on a yearly basis. And of course, if you talk about businesses, I'm sure that there are several of those provisions I believe government will take a look at again. One, the issue around the 10 naira excise on sugar, the sugar tax. Okay, federal government may take a look at it, and if it is something that they think is going to make life difficult for the citizenry, they will amend it. We expect even before the end of the year, before the political environment becomes very charged, that some of these laws will be reviewed and amendment can be made. Again, if you look at the gain on sale of shares, if the impact is more on the citizenry, the resident, as opposed to foreign portfolio investors, I believe government will also look at that threshold and amend it as quickly as possible to lessen the trouble of Nigeria. So it is a good thing that we're having regular amendment to the Nigerian tax law, and we believe that that will also help in fine-tuning and ensuring that the focus is on the national tax policy.
For sure, we have to really commend the Buhari administration on keeping to his word of the yearly review of the Finance Act 20.
Definitely.
It's on that note that I really thank you, Mr. Folorunsho, for your time. It's really a pleasure talking with you and gaining from your wealth of knowledge and experience.
Thank you very much.
Federal Government Budget 2022 and the Finance Act 2021 laid bare. Next episode, we will be speaking with Mr. Matthew Gbonjubola, Group Lead, Special Tax Operations Group at the FIRS. He would be looking at the same issues from the perspectives of a tax collector. So let's look at taxation of e-commerce, especially taxation of non-resident firms. Now, these measures look ambitious to us. How will it be to implement?
It is actually not ambitious. And it is not a brand new provision. I know that I've read one or two comments in the public media suggesting that it is a new tax, and it is actually not. The provision first came in 2019 via the Finance Act of 2019. We tweaked it in 2020 Finance Act. What we have done this year is to make it clearer and to also be certain, because one of the maxim of taxation or canons of taxation is clarity and certainty. And so what we have in the law now is to make it clear that we are an overseas company, that is a foreign company, a non-resident company in Nigeria, fulfills the various conditions to become taxable in Nigeria, particularly by having what we call significant economic presence, then the service may have the option of assessing such a company to tax based on its turnover. What we have before required that such entity must file returns, and then we must go through the issue of assessment and whatever. And we also find out that that may be cumbersome to companies that do not have physical presence in Nigeria. And so therefore, it gives an option. That's okay, you don't want to do returns, you don't want to have auditor in Nigeria to get your account and all of that, then we could actually assess you based on turnover. And we already have that provision in Section 30 of CETA. So it's not a new provision. They're just bringing in this group of taxpayers, new taxpayers, to come under that provision.
So I also want to know the measures put in place.
As we speak, we already have enough measures to be able to enable such taxpayers to register, file returns, and to pay. We have various channels. For example, we have what they call the Tax Pro Max, which is our flagship tool for tax administration. And so a non-resident entity could log into our FRS system through the Tax Pro Max, register, file returns, and pay. We are also working with SEAT. SEAT is an international tax organization in South America. We are providing what we call a DEC tool, that's a DEC tool, which also is primarily for non-resident entities, for them to fulfill their tax obligation, including VAT obligations. So we already have those measures. We have issued an information circular and guidelines that taxpayers in that category could use for the purposes of fulfilling their tax obligation. So we have measures. We have a completely different office where affairs of such companies are handled. We call it non-resident taxpayers office. It's in our office on Awolowo Road in Lagos, Ikoyi, Lagos. So we have already structures, both in terms of staff, in terms of tools, in terms of communication, and also in terms of the guidelines that will help the relevant taxpayers to comply with the law. So we are ready. We have all the structures on ground.
Be sure to join us. Remember, the employer's annual filing of payee returns is due by the 31st of January. This is filed to the respective state IRS where employees reside. Go out there and do the right thing. As we leave you with this parting shot.
Let's go taxing. Hand in hand, cheerfully. We go taxing as birds of a feather that flock around to make a living. With our signals drawn on the field, we go to pay our taxes cheerfully, knowing that our lives come to naught without us taxing together, to build our homestead, to mend our lives anew, to make our lives whole. Let's go taxing, hand in hand cheerfully, drawing our strength like a broom that breaks knots, for taxing together makes us wholesome.
Have a brilliant week ahead.